Good morning, retail traders. This is Washboardjim with a sneaky snake trading strategy, and I want to talk about the video I did 3 weeks ago to tell everybody to suggest everybody that we hit a hard resistance on a double top all-time high, and that I didn't think we were going to break it. And another reason I talked about that video is because we had a little triple top on the yearly candlesticks. As you can see, we hit hard resistance up here 3 different times, 3 years in a row. And we hit a higher lows, which is kind of set up as an ascending triangle. But we did hit some volatility, and we did kind of go down farther in the last 3 years. But I look at the bodies of the candles. But also in this case, we have to go with the wicks because these are yearly candlestick patterns, and that's called a triple top. Triple top is a area where we are going to have some kind of consolidation. We did find a resistance, and that you do expect to see a pullback, period. Same thing with the double top all-time high. So let's go ahead and pull up that 3-year weekly time frame. As you can see, we did have a double top all-time high, and I'm using the body of this candle as a resistance level to break. And we're going to go ahead and put that price in right now. I'm going to magnify this up. So we have 2 resistances to break. We got that all-time high, and we got this here lower, the body of that candle, and the upper shadow of that candlestick. Now these are on weekly time frames. The support level was back on top of this Darvis box, and we're going to put a price line in right there, right around 470.65. Anything below that, we could have some more damage, and we could fall back more. So as I pull up the yearly daily, we did pull back to that lower support here yesterday, and that needs to hold. But there's one negative thing on this here on this right now, and there's one positive thing. We've got the 9 crossing down and running up against the 21 SMA. That's the 9 EMA. You're bullish as long as we stay above the 9. You're bearish once we go below it. We also went below the 21. So the market's going to think about this. Does it want to go ahead and pull back? Now this is on a daily. This is what we've had to deal with in the past 3 weeks, 3.5 weeks, that we did hit that double top high. And we did create a new high here, but it did not break that resistance level that we've seen on the upper shadow of that body of that candle on the weekly time frame. So we did pull back to support, and that's what we need to hold at 470.65. If we don't, we're going to fall back a little bit more, and I think that next support will be right around 468.31 for a strong buy. Now, I want to make this notable. I watched CNBC. Lately, I've been watching it because I got rid of my Trade Ideas scanner, which I used to play new highs and new lows, and also play the low float and the momentum trades. So I had to come up with a new strategy, or at least to fill in that void that I had by not using Trade Ideas. And that, it takes time to warm up. It takes time to warm up. So right now, when I'm looking at these charts, I'm using chart patterns, moving averages, and being in and now. And this is a strategy that I created about 3 years ago. I call it the sneaky snake. And I let the charts do the talking. Not a fundamental trader. The only thing I need to know about a stock is the news that comes out, and I need to know if they're holding cash, if they've got cash. If they're burning cash, I am a lot less leery of taking that trade unless they have cash and they're profitable and they're not in debt. They're not in debt. Debt's a big thing to me when it comes to stock. Then you start playing with low floats and pumpers and people that don't know how to trade. In this environment, you've got to have cash, a lot of it, because you're either going to get sued or something down the road. You got to have cash. So right now we're bearish, and what we got to do is we got to break this 21. That's the 21 SMA. Now if the 9 crosses down below the 21, then we're definitely going to start seeing some lower support levels. And as of now, I'm going to say 468.31, and that'll be inside of that Darvis box. We also have what you call an expansion pattern, which I love trading these expansion patterns. They're so full of big gains, and if you have the patience to wait. So for example, we got this, which brings us up to the double top, and we've got this. Now this is called a blowhorn pattern. We could easily drop down and get more of a correction and bounce off the 51 and the 51 EMA and the 51 SMA if we do not hold that 468.31 inside of that Darvis box. So an expansion pattern, we could get the volatility where it expands and breaks down, and would have the 1, 2, 3 right down here to take that trade and run it back up inside of that. A lot of people will freak out because they don't trade the blowhorn megaphone pattern that much. We've seen a lot of it here in the last 2 to 3 weeks. We've seen a lot of them patterns, a lot of good big spreads where you can make a lot of good money. And that happens 4 or 5 times a year when you get them big spreads on a sell-off. And I always love trading the SPY and the SPX in that period because it's so easy to read. The charts are so clear on the SPX and the SPY compared to a regular entity, a regular stock, in my opinion. So keep in the now. Let them moving averages work for you and them chart patterns. And right now we got a megaphone, which means we are at the pivot point inside of that megaphone, and we are bearish because we're below the 21. So today's resistance to break, if we want to go higher, write this down, set you an alert, is going to be somewhere right around between the squeeze of the 21 and the 9 EMA. And I'm going to say on the top of that, they're 21 at 473.50. That's going to be our number to look at today. If we break that, we definitely will move higher. If not, we'll find some resistance, and I'll be able to get a put and pull that baby back. And let's pull up the 20-day 1 hour. Beautiful, beautiful spot, beautiful spot. I really like this spot. I think this will be it. We got the 200 SMA on the 1 hour time frame to break resistance. If not, we'll come back here and double bottom and hit that 470.65. And if that doesn't hold, we can drop down and have a real strong buy at 468, which is almost an inverse head and shoulders right down here. And we're going to draw a little price line. I just now noticed something that could give us a little bit better entry. We'll go take the body of that candle right there and run it up to the body of that one. These two right here, that's your left shoulder. And we could come back and create a right shoulder right here and then have a nice little run up to the 200. So this is a very important number to break today, and that's at 473.50 on the SPY. Now the SPX, I'll use the SPY and the VWAP to trade the SPX. We did break below the 200, which is bearish on the SPX, and that's our resistance to break today, right around 4744.05. We'll put a price line on that position and see if I find some kind of equilibrium over here on the side. Right about there. 470, 47, 42, $43. $4,743 is going to be our resistance to break today on the SPX. $4,743. And we'll make this into a different color, and that's going to be our channel for right now, with the low support at 472344, which we hit yesterday, and resistance to break $4,743 to the upside. And if we break that, we can run up and hit the 51 on the 1 hour time frame. Now you pull up the weekly on this one here. We did hit the double top resistance, and that's going to be 4781.35 off the body of that candle. 4781.35, right to the penny. That's going to be your hard resistance. Now remember, CNBC being in the now, they're upset with themselves. They're uptight. I called resistance here. I called support here. I called support here. I called resistance right here. It's easy to find these resistance. Called the neckline right here. We hit that. We pulled back. And now I'm calling the double top hard resistance to break. The bank earnings sucked. There's only one person I could tell on CNBC that actually admitted that their earnings on the banks sucked. Now, we called the bottom on the banks, and we run it up to the resistance level. So I'm leery of the banks right now into the next quarter, or maybe we need a good pullback on the banks. They just literally sucked. The earnings did. And finally, someone on CNBC said it, and I was like, what did I hear? These guys are bullish, and they were wrong. They said the market dictates how they trade. The market's telling them this, the market's telling them that. I find that very hard to believe. That's an assumption. The charts are evidence, and it's a history. And if you go with the charts and rely only on fundamentals, you're going to get stuck in stocks. You're going to get stuck. Now, if you look at the charts and you find resistance and support levels and then go to your fundamentals and use it as a backup, you'll have a lot better chance of knowing when to get in and know when to get out of a trade. But like I said, they didn't call the double top. I did, and we had some resistance level. I've been trading here for 20 years. I've never seen extreme greed like I see right now with CNBC and a lot of these fat cats. Same with Boeing. I mean, Boeing had that real bad news, okay? So they got on there and they said, oh, this is all going to be resolved in a week. And I said, no, it's not. This was a serious situation. They're so bullish in the market that they've become complacent. They become very extremely greedy. You can't get like that. You can't be complacent. You've always got to be on the move and be in the now. So I said, no, we're going to pull back. We might even hit the 200 on the weekly time frame. And then I'll be able to take this trade and run it back up to the upside. I shorted it. I also went long in it. When it was due, we had a double bottom down here at 120. This thing was cheap. Now we're up here at a double top. And we had that real bad news. This thing got real expensive real fast, overnight. Can you imagine if you were in that plane and you were 20,000 feet higher than what it was? You wouldn't be here. Your arms and limbs and your eyeballs would be poking out of your head. Your arms would be off. You'd be torn apart. So this was a very serious situation. And I don't think it just belongs in that door panel. I think it's all has to do with how they've been hiring through wokeism, and the company's just going to fall apart. And Boeing is a big deal. It used to be a gauge on how the market was doing. You know, if there people were traveling, then they easily assumed that people were spending money. Same thing as the car industry. Well, the car industry is in a total mess up right now. I mean, you can't restructure something overnight. And the same thing with Boeing. They're both a total mess. So let's see if we can hit the 200. If not, we can start bouncing because we've had 3 black crows right here with involving gaps. And look at the sell-off that we've had. Ever since 2 weeks ago when that news came out, they were pumping this stock to go back up. They brought their fat cats on CNBC. Oh, we're still holding. This is going to be a long for us. You know, it's going to bounce back. We're going to be back in the air in a couple weeks and nothing. It's no big deal. But it is to me. We did have our first little breakout off this here support level, and I did call this support. You go back and watch my little video I did on Boeing, and you'll see what I was talking about. So now we're down. We definitely pulled back and hit my little support level. So we're going to watch this today and see what happens. Right now, if you pull up the 1 minute, we had a nice little breakout to a double top. So if we pull back and find some support level, I think it's going to be right in here, right around the 203 area. And I'm definitely going to set an alert right there. So the basics of this here video is to tell you that I nailed that resistance level on a double top all-time high to expect a pullback. Look at the definition of a double top and it'll tell you exactly what it is. Same thing as a triple top, and usually triple top, the fat cats will get out of the trade. And they did that on the 2nd of 2024. Right now we got a double top. This thing going to consolidate, pull back now, and then maybe bounce back up and try to break that triple top resistance. And we could pull back more. We could get some more bad news, but some good news came out yesterday on Boeing that they completed their inspections, and I can't, in the life of me, believe that. This company's too messed up. Same thing with Ford. Ford came out a couple weeks ago and the CEO says, we're going to crack down on all these recalls and we're going to do things perfect and blah, blah, blah from here on out. That's just talk. It's just talk. And then they got downgraded yesterday. So I take this very seriously, and I was emphatic when we were down at cheap, when things were cheap, and now things are way too expensive. When you start seeing these upgrades, $50, $60, $100 above the price they're at now, you've got to question. You got to question why are they upgrading these stocks at an all-time high, a double top on the SPY and the SPX? Because they don't want to give up this momentum, and they got complacent. It's good for a consolidated period. Everything has to. That's why we have recessions every 4 years. We used to, but ever since the money became a printing machine, we haven't hardly had any recessions. But we're getting very in debt. And usually a war will take that off the subject and they can go back to printing more money because we're in war times now. And yes, I did not vote for Joe Biden. He's the worst president in my lifetime. The guy can't even speak. To me, it's elderly abuse. It's elderly abuse. Somebody needs to step up and say, oh man, you can't. And then we got Kamala. Oh God. She couldn't make a decision if her life was based on it. Good example, she's in charge of the border. And we got all them criminals coming up from the border in good families, but it's just a money grab. They know that they can get a free life and live like a king, like they've never lived before for free. And it's a new welfare system. The Democrats need that to survive. So they're paying for boats. And it's also hurting our country. And then we got all the wars that are going on. So, the market's never good at geopolitical issues. They just write it off and not worry about it. And I take it in major consideration when I'm trading stocks. Just like what happened with Ukraine. We had a great pullback, supply issues, and we're having supply issues now. I'm surprised oil hasn't bounced up yet. I'm really shocked about that. So that's it. Retail traders. Let's see if we can find some support. Stay above that Darvis box on the SPY and the SPX. If we can stay above this here Darvis box, which we did dip down in here below. There's that megaphone pattern that I've been talking about. And we hit that megaphone and run all the way up to the top of it. This is megaphone, top of the megaphone. Now we're at the pivot point area of that megaphone, and we got to break that 200 on the SPY. If we do, we'll come back up. If not, we'll come back down and maybe find some equilibrium off this inverse head and shoulders right in here around 468, and then run back up. But it's all about chart patterns to me. Right here you see the megaphone, and you see the inverse head and shoulders, and you see resistance up here at the top. Double top, we pulled back. Snake, breakout, pull back, boom. These guys on CNBC are literally upset that they're being questioned about the momentum and the extreme greed in this market. This is something that I look at constantly as a reminder of how I want to trade. If I can find it. Buy in fear when Boeing was at 120 and sell in greed. We're way beyond this. We're way beyond, we're up here at extreme greed. And I think we're in denial right now. If you watch the fat cats, they're all in denial, but they're realizing that they priced in, supposedly the market said we priced in 6 rate cuts. You don't price in something like that until it happens. You know, I'm a reactor. I'm a predictor, but I'm also a reactor to facts. And these Fed guys, they've been wrong from day one. Since this administration has took place. The Fed is way behind the curve. Then they tried to jump the gun. They act like this is 1970 all over again when it's not. It's a totally different circumstance. And I think we had too many rate cuts to begin with. And it's all about the printing of the money. $6 trillion in 3 years. Think about it. That's it. Retail traders. This is a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now.